We will convene this meeting of the OPEB Trustees Committee on November 25th at 3:30 p.m. And my executive assistant, Dawn, is out sick today, so I will be taking roll. So let me get out my pen. Fran McGregor.
Present.
Mary Lamont.
Present.
Jeffrey Kirst.
Present.
And Mark Mathers is present as well. So we do have a quorum and we can move forward with this meeting. I am looking on public comment, and I will just ask our esteemed legal counsel, do I take public comment at this point?
No, it's you would take one with each of the action items, and then there'd be a general public comment afterwards. So
Very good. Okay. So agenda item 2.01 is introduction of our new member to the committee. For a long time, we've had a vacancy of the, we have 2 slots for trustees with finance experience. And Mr. Kirst fills one, and for a long time, we've had a vacancy of that second kind of public member with financial experience. We did receive applications, and there was a selection and a board appointment of Mr. Alex Taylor to fill our 5th committee slot, so we now have a full committee of 5. Unfortunately, Mr. Taylor had to go on an airplane and go somewhere today, so this schedule didn't quite work out for him. I'll introduce him, of course, next meeting, but he comes highly qualified. He has a interesting career. He's in the money management, investment management area. He worked for the Yale Endowment Fund, which is kind of the premier college endowment fund in the nation. He also worked for the San Francisco Giants for a number of years. So he is now, I think, operating independently, has his own money management firm in Incline. So he'll be joining us next meeting, but I wanted to kind of give you that news, even though he's not here. So it's nice to have a full committee. Makes having a quorum easier, and we have odd number of members now, since we know we have so many split vote items here historically. So, all right. Agenda item 2.02 is for possible action, and this is the approval of our minutes from our August 22nd meeting. Before I take a motion, are there any corrections to those minutes? Hopefully you've all had a chance to look at them. If there are no changes, I'll take a oh, I'm sorry. Any public comment? Seeing none. Okay, I'll take a motion for adoption of those minutes.
Fran McGregor, I move that we adopt the minutes for the August 22nd meeting.
Okay, do I have a second?
I second that motion. Mary Lamont.
Okay, any further discussion or changes or questions? Seeing none, I'll take a vote on that item. All those in favor say aye.
Aye.
Aye. Nay? Hearing none, the motion passes unanimously. Thank you very much. Okay, our next agenda item is for presentation discussion only. These are unaudited fund financial statements for the first quarter of our current fiscal year, i.e. for the period ended September 30th. And we have Mindy Capron, our Assistant Controller, who will present those financials.
Thank you. Mindy Capron for the record. If you look at page 9, I'm looking at the comparative statement of net position in the OPEB trust. The first item up here is assets, and you'll see our cash is still negative. That's a pooled cash account with the district, so that's how it can go negative. But we're working on, we need to transfer money out of our investment into this so it stops glaringly being in the negative position. So that's what we're working on doing. But, and you'll notice there's 2 lines underneath that now. There's an RBIF investment of $19,724,000. And we have moved the money into US Bank, so that's a second line here underneath that cash of $78,974,000. So our total assets is $96,119,000 between the two investment funds. Moving on to page 10, you'll see for September 30th ending, we have earnings, total revenues of $3.899 million. They're broken out between earnings on our investments and then realized gains, unrealized gains or losses, and then the contributions by employer. The realized gain would be from us, like cashing out our RBIF contributions and moving it into the US Bank. But that, we're ahead of last year by like 5.8 million in that area for revenues. And then expenses are minimal. So our change in our net position for September was 3.883 million, which added to the position we had as of July 1st of 92,235,000. Our net position is 96,119. And moving to page 11, we added it's going to be a 2-page presentation now. RBIF is on page 11, which you're used to seeing. What I'll call your attention to is our cash out of 77 million at the end of, well, that was in August, but for the quarter it came out and we moved it over to US Bank. So our RBIF investment is still $19,724,951 through September. Moving to page 12, this is the new page. We have US Bank OPEB account now, an investment account. And we, like I said, moved it in August, and we had an increase of $238,000 to that investment. We've also moved some money from Wells Fargo, had about 1.7 million. So that's why you're probably saying, why isn't it 77 million added? It's because it's Wells Fargo added in there as well. So the asset balance for the US Bank OPEB through September is 78,974,229. So any questions?
Jeff Kirst, a couple questions. On the first page, the assets, the 19 million, that went up from 10 million. Is that stock market gains, interest rate going down from our last meeting?
I would say it's the investments in the market.
In RBIF, because that went up. And then, let's see, the other question I had, you took care of the overdraft amount, and then you mentioned that it's realized gains. Was that gains from RBIF with the $77 million that went over into the strips? Is that why those are called realized gains?
We sold them, so sold the RBIF investments.
So that's the gains? Yeah. And that's what that represents?
Right.
Thank you.
So just to be clear, so, we had a number of discussions at the committee about pivoting away from RBIF and de-risking and going into fixed income investments. The fixed income investments, the U.S. Treasury strips we bought, are held in a separate custodial account at US Bank in the OPEB trust name. It is not even commingled with the district's assets at US Bank. So again, we withdrew 77 million out of the RBIF account to invest in US Treasury strips. Those US Treasury strips are held at US Bank, our custodial bank, like I say, in OPEB trust name. But we had close to 20 million left of assets that kind of we let it ride in RBIF. And so in the future, we'll talk about, do we continue to leave 20 million in the RBIF account, or do we want to further de-risk it all and so forth? But that's why you have now two different accounts. One where we still have money in RBEF, and then, as we'll see here in our next presentation, we have monies at U.S. Bank, and I should say that both represent the U.S. Treasury strips we bought and liquidity, short-term monies that are sitting there essentially as cash. So the financial statements basically represent and reflect the actions we took pursuant to the OPEB committee's approval previously to kind of change the investment approach here. And, our timing, better be lucky than good, right? Our timing was pretty good on the execution of these concepts, better than I ever would have actually thought.
In our, the U.S. bank account, that is, the treasuries are held there.
Mm-hmm.
And then we've got the cash also with U.S. Bank.
That's exactly right.
And then somewhere in the documents that I read, it said that Buckhead is the state. It says in here that they're approved by the state, or they represent the state in investing funds, a lot of different funds.
So Buckhead Capital Management is a registered investment advisor that both manages some of the state's monies and has managed the district's monies since 2020. We had our own contract with Buckhead. And then over the course of time, they became a manager for the state, and there was superior pricing because of the state's greater assets. So we joined on to the state's contract, and that's what we did here for OPEB. Since then, we did a joint, to further complicate it, we did a joint RFP with the state, and Buckhead again was selected. So now we're back to having our own separate contract with Buckhead. But they do work for both the state of Nevada, Washoe County School District, then also Lyon County School District. And Tara, who's representing Buckhead, can come up at the next item and give their whole resume. But they do manage monies for many, many entities in the state of Nevada. So, yeah. All right. Seeing no further questions, we will move on. Again, that was for just discussion and presentation. And so our next item is agenda item 2.04. And we've invited Ms. Tara Hagan of Buckhead Capital. You met Matt Bowden previously. Tara's former Chief Deputy State Treasurer for Nevada, who's now working for Buckhead. And she'll go through this presentation deck with you that talks about in greater depth how these monies are invested. Just a little bit of preamble. Again, our investment plan that we prepared pursuant to your direction created 3 accounts. There's what we call our matching account, where again we bought the U.S. trips to match off against future payments, future liabilities. And then there's a liquidity account where we keep a fair amount of cash just to cover cash transactions. And then there's this third account where we have remaining funds that are invested long-term in a blended portfolio managed by the Nevada PERS in the RBIF account. So we've got 3 accounts, which is what you'll see in this presentation deck. Again, we worked with Buckhead to execute all the transactions earlier in the quarter. Worked out beautifully, I think. But Tara will go through, again, kind of this new report that they've created for the OPEB Trust Committee that shows you where those monies are held. So with that, I'll take it away, Tara.
Thank you, Mark. Good afternoon, Tara Hagan with Buckhead Capital. It's nice to be here. Let me just, sure I can, there we go. So I am on page 14 of the board's packet. So here is just the overall portfolio, and as Mark has indicated, if you look inside, that's the total portfolio valuation as of September 30. So that's the 98.7 essentially $1 million. And then you can see it broken out by the 3 accounts. So essentially what we've done is execute on the board's plan from August in terms of creating essentially that matching account, and obviously matching those underlying assets, which are the U.S. Treasury strips, to the future liabilities, right? So those are the medical subsidies that we foresee paying, both for eligible retirees and also to PEB, to the Public Employees Benefits Program. And so I think the best way, just to kind of stay on the matching program for a second, I didn't know I was going to have to do this, but I'm going to bounce around a little bit. But I think what best illustrates what we've done in the matching program, and these were purchased, all these U.S. strips were purchased about the end of August. And you can see they vary in the face or principal amount, and I know it's pretty small there. And then more importantly, the maturity dates. So you can see your first maturity date is next year, May of next year, with a face value of 5.845 million. And that goes all the way through, if you turn to page 21, through May of 2053. So really locking in that principal amount at the varying maturity dates to meet those future cash flow needs. So that kind of gives you the gist of the matching program. So I'm going to go back here on the overall portfolio to, as Mark indicated, there is the liquidity account, and under the holdings and the liquidity account, you'll see there's actually, as of September 30, there were a couple pieces in there. The money market, so the total amount, the liquidity represents 4.25% versus that matching account represents a little over 76% of the total portfolio. But within the underlying investments in the liquidity account, there's the money market fund, which as of September was about 1.8 million, and then there was a treasury bill that has since matured. So for making up a total of that 4.2 million in the liquidity account. And then finally, represented there to round out 100% of the portfolio is nearly 20% of those excess monies that are in the RBIF account. So those are invested in equities to create that inflationary hedge that you're looking for with this kind of a trust account for over many, many years. I do want to draw your attention to this next page, sorry about that. Page 16, there are a couple corrections on here in terms of the book yield. So this is the total, another just total portfolio look. You'll see that the total book yield, or yield to maturity for the matching program is noted as 4.79. That's actually 4.05%. And that is correct on the next slide. It's not correct on this overall portfolio. Also, the liquidity account is not 4.05, but it is 4.72% in terms of book yield or yield to maturity. So first presentation, just getting our ducks in a row here. So like I said, the following slides are correct, but those two are not. Okay, so moving on, we'll just go to this. I'm not sure how to, oh, thank you. So this slide represents your nearly 20 million or 19.7 million in the Nevada RBIF. So with the majority there, or the largest percentage, I should say, 43% in U.S. large cap stocks. The next in U.S. bonds, more of an aggregate bond account at 27%. Little over 17.5% in international equities, and then shorter term investments. So you can see there for the first quarter of 2025, the total return of 5.3%. So pretty much in line with the benchmark.
Jeff Kirst, question, please.
Of course.
The RBIF asset mix has changed somewhat. Is that because the U.S. stock market went up so much?
I'll look to Mark for that one. Thank you.
Yeah, I asked Nevada PERS staff about that, and I believe their earlier allocation was 40% to bonds, and they've just now split it between, the U.S. bond index 28% and short-term cash 12%. that was just a asset allocation change their board made a few months ago, just based on kind of their perceptions of the bond market. Again, we don't have any vote in that, but they just further broke it out in fixed income between those sub-asset classes.
And this is where the $19 million is.
In the entire blended portfolio, yeah.
Yeah, that's correct. And then you can see here just the overall yield for the quarter, including the ARPA for the total portfolio. So the total trust was the 2%. And then I'd indicated before in terms of the liquidity account of nearly 4.2 million in the liquidity account. As of today, that's invested 100% in the money market account, which as of Friday was yielding about 4.5%. So obviously, that's gone down a little bit with the decline in interest rates of the federal funds rate, so. but-
Another question, Jeff Kirst, please. As the strips mature, do they go into the money market account?
Yes, they would just flow naturally into that money market account and into the liquidity, and then they could be moved into the liquidity. But yes, they
And
would
then
go
you'll keep them
automatically.
there until we get a call for health insurance, life insurance funds, and
What happens is the district's health insurance fund will pay out those subsidy payments throughout the year, and then we'll just make one year-end transfer into the health insurance from the OPEB fund for those costs. So that's why we
and
told
that'll
Buckhead-
probably be in the money market fund?
Yeah,
Probably.
yeah. That's why we told Buckhead, just go with May maturity dates, fiscal year end.
Okay.
And so we'll just do one last distribution at the end of the fiscal year versus throughout the year.
Thank you.
One more correction I do want to note on this page. You'll see that for the liquidity account, it has that total book yield or yield to maturity as 4.79. That's actually the 4.72 number.
Okay.
So just a quick correction on that. And that is really all I had for the presentation, but happy to take any additional questions.
So I just, we were fortunate in that we were able to execute and buy these U.S. Treasury strips before the Fed lowered interest rates. So that was nice. And, the bond market's volatile. Things kind of go up and down. There's still, speculation about how far the Fed may cut and how fast. But clearly, lower rates are in our future. So, the timing here was good in that we got ahead of Fed cuts.
Down today. They announced the new Treasury Secretary.
Yeah. Is it Besant or what? Yeah. Yeah. So, yeah, we expect a fair amount of probably volatility going forward as a new administration takes office and people try to figure out policy-wise where things are going to go, right? So,
Definitely some uncertainty, I think, but yeah.
Yeah.
Wait and see.
yeah.
One more question. With the money in the liquidity account, that's at U.S. Bank.
That's correct. It's all custodial under U.S. Bank, yeah.
Not thinking there will be any crisis or anything like that, but that's FDI insured for $250,000, correct?
No, those are government money market funds, so they're governed under the SEC, so you don't need the FDIC.
So those are in short-term
Correct.
treasuries?
Correct, with the NAV of 1, so having that stable NAV at 1 the entire time. Yeah.
Okay, that was for a presentation discussion only as well. Thank you, Tara. Appreciate it. Our next item is the exciting actuarial report annually that we receive. And I was telling your fellow trustees, Mr. Kirst, that any and all questions you have, likely we'll get a response of, I'll get back to you on that. But you can take a shot. If you usually have questions about this report, but this is just to tee it up. Mindy, I don't know if you have any comments here about this report, but this is annually we get an actuarial valuation of our benefits and liabilities. I think this is the roll forward. Yeah, it's the roll forward calculation, which means kind of it's a quicker update
They don't take new census data. They use last year's data.
Okay. So, with bond yields being still at this point, June 30th, fairly elevated, that actually helps our net position, right? Higher discount rate on our liabilities. Mindy, I don't know if you want to go through any of this at all. Again, it's riveting.
I'm actually prepared to.
Please, Mindy, please.
I can't clear my throat. Excuse me. Okay, Mindy Capron for the record. Excuse me. This is the actuarial evaluation prepared by Gallagher. They do that on an annual basis, and it quantifies our actuarial basis for the value of our net OPEB liability. And it does go into the district's financial statements annually, so we have to make entries to book this information into the financial statements. As Mark said, their assumptions, on page 25, I'm looking, they're, page 25 isn't the exhibit yet. It's, I'm looking at the discount rate, that's about a third of the way down. They did change it in this assumption from 5.10% up to 6.42%. And like Mark said, this is a roll forward year, so they didn't update the census. So looking at the number of employees and all that, it didn't change. So back up to the key results, it's about a third of the way down. The OPEB liability at the beginning of the year was 147,812 million. At the end of the year, it went down to 127,250,000. And we have as of June, we had a fiduciary net position investment of 92,236,000. And so that the difference between those numbers is our net OPEB liability of 35,014,000. That's all on page 25 of the report, of the board report. And then there's other exhibits to go through here, but I just want to call your attention, Exhibit 2. It kind of gives you more of a detailed breakdown of how it went from last year to this year within each of the funds, the health insurance, the life insurance, and the PEB account. And this is where I'm going to say we can bring out our actuary if you'd like to have more details, because it's pretty complicated and it's an actuarial thing. But this gives you a breakdown of each fund and how it changed from last year to this year. Skipping to page 31 in the board report, Exhibit 5, just to call to your attention, it gives you trends of discount rate sensitivities. So if things change by 1%, what it would do to our liabilities. So that's always of interest, I would say. But other than that, that's what I wanted to call to your attention. And if anybody has any questions, we can try to answer.
Jeff Kirst, on Exhibit 1, the total OPEB liability, the actives, those would be people who are still working,
Yes, they are.
and everybody who retired after 2006, none of them would be, those would be our retirees.
Right.
And then the actives are ones who have been working quite a while. So they
Yeah.
may be retiring, and then
Yep.
the actives will be diminishing pretty greatly, I would imagine. They still retire at, what, 30 years? Longer, son? Yeah, okay. Well, I think when I started, there was a counselor who was 86 years old.
We actually have some of those folks again, I'd just point out, these calculations are a little bit more volatile than you would hope because, again, of the calculated discount rate. So as bond yields went up, our discount rate went up, our liabilities went down. With bond yields coming back down, eventually we're going to see a higher liability, again, just based on present valuing future liabilities. I don't want to tell you to take it with a grain of salt, but, again, there's a fair amount of present valuing here that changes year to year. What, we had done with the actuary, again, is to look at actual cash outflows, hard payments. And, again, it's an estimate. Those will be off, but not as much as what you're seeing here in the present valuing of the actuarial calculation. So what the actuary forecasted that Tara went over, we expect, 5.8 million in outflows. It could be 6 million, it might be 5.7, but it's not gonna vary hugely as opposed to the total OPEB liability or net OPEB liability they're calculating here. So I hope that makes sense. I just don't want you to think that, we're gonna miss the mark hugely on those cash outflows. I don't expect that to be the case. Now, medical inflation being what it is 30 years from now, maybe they did miss the mark. But that's why you've got money in the RBIF account too. As Tara said, it's a hedge against kind of inflation. And so if we're a little bit off on payments 30 years from now, not that any of us are still gonna be on this committee 30 years from now, but there's money in that RBIF account to apply if we underestimated future liability payments.
Jeff Kirst, as I recall our prior discussions, the legalities of it are that the school district has to make up a difference anyway if it doesn't hit the mark properly.
That's right.
Or as
At
hoped.
at the end of the day, the public agency, in this case the district, is absolutely legally responsible for paying these payments. This is just a vehicle to help support, that obligation and do it in a more, from an investment standpoint, a more effective way than what the district itself could do. Yeah.
Thank you.
Yeah. Okay, so we don't have any too hard questions from Mr. Kirst this year on the actuarial report. We're disappointed, Mr. Kirst. Try to do better next year, okay? Try to,
Going in detail, and
yeah.
it's all great stuff.
Okay, very good. All right, that concludes then agenda item 2.05, which takes us to agenda item 3.01, which is public comment. Does anyone have any public comment in our audience? Okay. Seeing none, our next meeting is scheduled, I see, for February 27th, 2025. Hope you can all make it. And which means we'll have Thanksgiving, Christmas, and New Year's to go through. I hope you all have wonderful holidays between now and then.
Jeff Kirst,
Yes,
one possible glitch,
yes,
as an old person who looks for interesting things to do,
okay,
I had seen that the Nevada State Legislature is in session. So
come February, yes,
February 3rd.
yes.
I said, I'll put in an application. They hired me as a person.
To do what? This is exciting. What,
It was exciting. I've been down there quite a few times with our association, and I talked to a lot of the people there as a legislative advocate. So then the assembly hired me to be essentially a secretary
Okay.
of one of the committees.
oh, wow,
January 6th, I go down to be trained. And I had told them, I said, I can't really visualize myself typing minutes and whatnot. So they told me, Jeff, it's not like that. They have a machine,
okay,
artificial intelligence.
that's
Are not correct as I have heard, and then send it to a proofreader. The proofreader sends it back to me. If the proofreader didn't do a good job, I send it back to the proofreader, then it comes back to me, and if I say it's okay, it will be put into the Nevada State Archives. That lasts until June 3rd. I'm to be available 7 days a week, 24 hours a day. So I committed to that. I'm not sure how it fits into our meetings, but I'll find out when I go there for the training.
Okay.
I'm very excited about it.
Thanks for letting us know. You'll have to let us know what committee that is.
They won't tell me.
Oh, you won't find out until,
Well, kind of a surprise they even hired me, but I went down for an interview and then they
Yeah.
liked me and they said, you had 2 different jobs you could do. One was to run one of the little offices for an assembly person and the other was the committee secretary.
wow.
And they said, well, you're probably gonna be best suited as committee secretary, especially since the machine that does the transcript, it's not Miss Quinn who did all of the minutes for me with, the high school. So,
Wow,
yeah,
okay.
I'll find out the
Well,
committee.
let us know.
They already took my pictures for IDs, I signed all of the forms, and, I said, well, what if I can't do this? And then they said, it's okay, you'll just be fired.
Okay.
I'm kind of excited to go down there. I told them I have 2 4-wheel drive cars, so I can, and I timed it all out. From the lake, it's what, 30, 40 minutes, and from Reno, it's 30, 40 minutes.
Mm-hmm.
So, and I know my way around there, thanks to our WEA with how that all worked out. And they've remodeled the whole facility, they put in a restaurant. The gift shop is still good, they raised the price of the Gold Nugget postcards that I like so much from 25 cents to 40 cents.
Inflation.
That's inflation.
Yeah, it is.
But
Well,
that would be
let me
my
know what
only
committee it is so I can give public comment, so I can, because I've been known to do that from time to time, so I can,
When I was down there with our teachers association, it would be, a lot of the teachers were on contract, so they would want to go. They had families and other things like that when the day was over, but I generally stuck around if they needed a body in the room. I never gave public comment, but they have comment from Las Vegas. It's going to be,
no, it's legit.
I'm excited about it. It'll be a new dimension for me.
I think they're lucky to have you.
We'll find out if they're lucky or not, but I'm gonna do it, so, yeah, I'm prepared, I've gotten my neckties, shirts, everything, I'm set for whatever they require. And I even have on my black shoes here, breaking them in.
Those are nice and shiny, and I'm glad to see that. I'm glad to see they're in good shape.
And for our book club, may I divert a bit?
I think we're getting off, I think we're,
adjourn the meeting.
yeah, let's adjourn the meeting. I think we're getting a little off topic, so,
Yeah.
yeah, why don't we adjourn the meeting? Thank you very much for coming. Appreciate it.